Three big reasons people fail building business credit and how you can succeed. Business credit is credit that is obtained in a business name. With business credit, the business builds its own credit profile and credit score. With an established credit profile and score, the business will then qualify for credit. This credit is in the business name and based on the business's ability to pay, not the business owner's. Since the business qualifies for the credit, in some cases there is no personal credit check required from the business owner. The business can use its credit to qualify for revolving store credit cards like Staples, Lowe's, Sam's Club, Costco, BP, Walmart, even MasterCard, Visa, and Amercan Express. The business can also qualify for credit lines and loans. There are a ton of benefits that business credit provide, including that a credit profile can be built for a business that is completely separate from the business owner's personal credit profile. This gives business owners double the borrowing power as they have both personal and business credit profiles built. Business credit scores are based only on whether the business pays its bills on time. A business owner can obtain credit much faster using their business credit profile versus their personal credit profile. Approval limits are much higher on business accounts versus personal accounts, which is yet another benefit. Per SBA, credit limits on business cards are usually 10 to 100 times higher than consumer credit. When done correctly, business credit can be built without a personal credit check. Business credit can quickly be obtained regardless of personal credit quality. Most business credit can be obtained without the owner taking on personal liability or a personal guarantee. This means in case of default, the business owner's personal assets can't be pursued. Even though most don't know this, when a business owner applies for financing, their business credit is reviewed. Not having business credit established will get an owner declined for financing. There are no regulations that require the lenders notify the business owner for their reason for denial, so most never know. Take a look at this actual business credit approval for a $6,000 Citi credit card. Here is a U.S. bank approval for $4,000. This approval from Chase is for $15,000. Here is another approval for $15,000 from Bank of America. This Chase approval is for $22,000, showing you how much credit you can really start obtaining with business credit. And here's another approval for $22,000. Now, let's dive into the three big reasons people fail building business credit, with the first big reason people fail, which is that their business isn't set up credibly in the lender's eyes. The perception lenders, vendors, and creditors have of your business is critical. Before applying for business credit, a business must ensure it meets or exceeds all lender credibility standards. There are over 20 credibility points that are necessary for a business to have a strong, credible foundation. To ensure you are seen credibly, it is very important that you use your exact business legal name. Your full business name should include any recorded DBA filings you will be using. Ensure your business name is exactly the same on your corporation papers, licenses, and bank statements. You can build business credit with almost any corporate entity type. If you truly want to separate business credit from personal credit, your business must be a separate legal entity, not a sole proprietor or partnership. Unless you have a separate business entity, corporation, or LLC, you might be doing business, but you are not truly a business. You need to be a corporation in order to separate personal from business. Whether you have employees or not, your business entity must have a federal tax ID number or EIN to start getting business credit. Just like you have a social security number, your business has an EIN. Your tax ID number is used to open your bank account and to build your business credit profile. Take the time to verify that all agencies, banks, and trade credit vendors have your business listed with the same tax ID number. Your business address must be a real brick and mortar building. Deliverable physical address cannot be a home address, cannot be a P.O. box, cannot be a UPS address. Some lenders will not approve and fund unless this criteria is met. There are business address solutions available at companies like Regis, including address only, where you receive mail and packages at your dedicated business address. Virtual office, which comes with professional business address, dedicated phone and fax numbers, receptionist services, and part-time use of fully furnished offices and meeting rooms. You can even get a true office with your own full-time private office with receptionist services, dedicated phone and fax, internet, full furnishings, meeting rooms, and more. You must have a dedicated phone number that is listed with 411 directory assistance under the business name to successfully obtain business credit. Lenders, vendors, creditors, and even insurance providers will verify that your business is listed with 411. A toll-free number will give your business credibility, but you must have a local business number for the listing with 411. Lenders perceive 800 numbers or toll-free phone numbers as a sign of business credibility. Even if you're a single owner with a home-based business, a toll-free number provides the perception that you are an even bigger company. It's incredibly easy and inexpensive to set up a virtual local phone number or a toll-free 800 number. A cell or home phone number as your main business line could get you flagged as an unestablished business that is too high of a risk. Don't give a personal cell phone or residential phone as the business phone number. You can forward a virtual phone number to any cell or landline phone number. Lenders perceive a credible business as one with a fax number. As a business, you will need a fax number to receive important documents. You will also need it to fax in some of your credit applications. You can set up an e-fax that goes directly to your email. Credit providers will research your company on the internet. It is best if they learned everything directly from your company website. Not having a company website will severely hurt their chances of obtaining business credit. There are many places online that offer affordable business websites, so you can have an internet presence that displays an overview of your company's services and contact information. It is important to get a company email address for your business. It's not only professional, but greatly helps your chances of getting the thumbs up from a credit provider. Setting up a business email address is just too easy and inexpensive to neglect. Avoid using free email services like Yahoo and Hotmail. There is nothing worse than credit providers seeing an email address like partychick2009@yahoo.com. The email address should be yourcompany.com. A great example is an email like support@yourcompany.com or john.smith@yourcompany.com. Your business banking history is vital to your future success of being able to secure larger business loans. The date you open your business bank account is the day that lenders consider your business to have started. So if you incorporated your business 10 years ago, but you just opened the business bank account yesterday, then your business started yesterday. The longer your business banking history, the better your borrowing potential will be. Having a high account balance is essential in obtaining an excellent bank rating. Having a good bank rating is essential for approval. Try to keep a bank balance of $10,000 or higher for a high 5 bank rating. One of the most common mistakes when building credit for your company is non-matching business addresses on your business licenses. Even worse is not having the required licenses for your type of business to operate legally. You will need to contact the state, county, and city government offices to see if there are any required licenses and permits to operate your type of business. Ensure that your state business filings are listed correctly. County license and/or permit filings are listed correctly. City license and/or permit filings are listed correctly. And IRS filings are listed correctly. The second big reason people fail building business credit is that they apply using their Social Security number. Always apply first without using your Social Security number. Some vendors will request it, and some will even tell you on the phone they need to have it, but submit first without it. Many don't even know you can get approved without it. When you apply using your SSN, you almost always are giving a personal guarantee. One easy way to know if you have business credit already is if you obtained credit without signing for it and providing your SSN. True business credit doesn't require an SSN in most cases to qualify. Business credit is using your EIN to qualify for credit. When you have enough credit built for your EIN, you can then get approved without providing your SSN. If you provide an SSN, your personal credit will be pulled in most cases. That personal credit will then be used for the approval decision. The key to getting approved with no personal guarantee or credit check is to apply without providing an SSN. Without providing the SSN, there can't be a credit check, and in almost all cases, there also can't be a personal guarantee. This newly obtained credit also can't be reported on your personal credit, only your business credit. Most credit issuers will approve you without your SSN if your EIN credit is strong enough. If your EIN credit is not good enough, you might be declined, and they then might ask for your SSN. No matter what any credit representatives tell you, credit can be obtained based on your EIN only. The third big reason people fail building business credit is that they apply for credit in the wrong order. A business credit report can be started much the same as a consumer report commonly is, with small credit cards. The business can be approved for small credit cards to help them build an initial credit profile. These types of initial cards in the business world are commonly referred to as vendor credit. A vendor line of credit is when a company or vendor extends a line of credit to your business on net 15, 30, 60, or 90-day terms. This means that you can purchase their products or services up to a maximum dollar amount, and you have 15, 30, 60, or 90 days to pay the bill in full. So if you are set up on net 30 terms and were to purchase $300 worth of goods today, then that $300 is due within the next 30 days. You can get products and services for your business needs and defer the payment on those for 30 days, thereby easing cash flow. And some vendors will approve your company for net 30 payment terms upon verification of as little as an EIN number and a 411 listing. When your first Net 30 account reports your trade line to Dun & Bradstreet, the Dun system will automatically activate your file if it isn't already. This is also true for Experian and Equifax. You need to have a total of at least 5 Net 30-day pay accounts reporting. Some vendors require an initial prepaid order before they can approve your business for terms. Vendor accounts are hard to find, so keep in mind that your vendors do not necessarily have to serve 100% of your business needs. We hope you have enjoyed discovering the 3 big reasons people fail building business credit and how you can succeed. We hope you have enjoyed discovering the 3 big reasons people fail building business credit and how you can succeed. Contact us today to learn more.